as we continue the conversation on Nigeria's investment environment, right? Of course, we're looking at the year-to-date return of the NGX, which as of yesterday was up by 40%. And also, there's a fixed income conversation to be had as well with respect to the latest federal government retail savings bond that, of course, whose window has been opened as at Monday and closes on Friday. So what's the flavor of Nigeria's current investment environment? There's the tweet from the Debt Management Office with the details on the latest retail savings bond, the 2-year 14.06%, the 3-year at 15.06%, and of course that closes by the 10. And then we compared the bond offerings for September and also for October. And of course, in the middle of that was the rate cut from the Monetary Policy Committee. Oyinkansola Aregbesola is an investment research analyst at AAG Capital. She joins us to talk about that environment. Oyinkansola, you're very welcome. Thank you so much for joining us.
Thanks for having me.
So we want to start with the equities market first and the 40% year-to-date return that we've seen as yesterday. What would you say have been the triggers?
All right. Thank you again for having me. So the drivers really is, I'll start from the macro environment.
All right.
So the macro environment has actually been doing well. We've been seeing improvements in the inflation numbers in terms of easing on a year-on-year basis, right? And there's also, growth in the economy in terms of the GDP numbers that we are seeing. We recently saw the Q2 2025 GDP numbers as 4.23%.
Yeah.
And basically, we've seen improvements in the services sector, even the oil, sector as well. So improvements generally, and then relative stability in the exchange rate has helped. And, this would basically filter into the performance of the companies on the NGX, starting from the consumer goods sector, which closed, I think, about 96% up year to date, right? So, and we've seen the likes of Boa Foods, the likes of Nestle, posting gains, as a result of improvements in their fundamentals. So basically, positive sentiment generally in the equities markets. There's also industrial goods sector, the likes of Dangote Cement and the likes of Boa Cement, and of course the telcos, MTN, the fact that they've, found a way to restructure, some of those FX, debts that they were having issues with. So basically, I would say fundamentals improving, the macroeconomic environment improving, which, would filter into the equities markets.
Thank you so much for the breakdown. So can this momentum be maintained going to the end of the year? Can with everything you've just talked about now that has fed into the equities markets, we're doing 40% so far this year, can that still continue?
Yes, definitely, because I would say that the macroeconomic environment is still expected to, improve further towards the end of the year. I mean, inflation is still likely to decline further. I mean, we're already, in terms of food inflation, we should see a bit of decline again in the inflation numbers due to the season that we are in, the harvest season and all of that. So, yes, improving macroeconomic conditions should support. However, I'll say we could see like a sort of mixed sentiment going forward, and it's tied to the new capital gains tax.
Yeah, we just talked about that. Yeah, please share your thoughts. Share your thoughts on the capital gains tax. Feel free. Go ahead.
So, I mean, if we should look at it, of course, the retail investors are mostly not affected, right? But if you look at the institutional investors, which are really like the large chunk of, how the equities markets move. So if we should see like a tax on their gains, which is above 150 million in a year, that can't send negative sentiment to these guys. So they could try and reposition their, maybe probably like a portfolio rebalancing, basically. So that, to be honest, that's really the only caveat that I'm saying. But aside that, the macroeconomic environment is doing well, and we're expecting improved GDP numbers for Q3, Q4. Right. So definitely.
Okay, great. How do you think foreign investors are viewing Nigeria? Do we take exactly how the market. I know the domestic investors mostly dominate the NGX, for example. But what do you think is? I mean, with you guys at AAG, possibly talking to foreign investors as well. What do you think is their mood looking at Nigeria's investment environment?
Okay, I would say really coming from how we've been performing in terms of macros, we're really doing well. So, that should send a positive sentiment to them. And there's also the fact that, Nigeria, especially the NGX, actually a cheap market compared to, our peers, African peers. So, and given the fact that we've had relative stability in the exchange rates, and the fact that it's also cheap compared to USD, so definitely it should signal positive sentiment to them. And of course, the reforms that have been coming from 2023 till date has been good largely, so that should send positive sentiments.
I want to get to fixed income and the money market space, particularly this retail savings bond whose window was just opened up. I want to get your take on it, particularly with the September offer, and I know this probably was before the MPC cut rates, right? All right, so versus, I know it's come down a little bit. What's your view, I guess, on the fixed income space? I mean, we can also include treasury bills as well in this. In terms of, I guess, rate movements since MPC cut and your general sentiment around fixed income and money market.
Yeah, fixed income. I mean, we've enjoyed elevated rates.
High rates.
Exactly. Earlier in the year, I mean, we danced, party and all of that, but I would say that the party is coming to an end. Right, so I'm actually expecting a further, downward trend in yields, due to the fact that we're seeing NPL, declining, and we could see a further rate cut before the end of the year. So generally, we should see rates decline going forward.
I do want to ask you about debt. Our first quarter public debt is at 149 trillion, which I think is about 23% increase from what we saw in the prior year. Also, this means that our debt to GDP now is 52%. The cap is 40. Would this, because we're seeing what's going on in France, we're seeing what's going on in the United States, Japan, everywhere else, with all these worries about debt and so on, and how bond yields are moving. Do you think this is going to give any concern to foreign investors that are looking at our fixed income offer?
Okay, so I'm going to take this from the angle of how we've been doing in terms of economic growth. Right, we've seen expansion. So, and we are expecting further expansion. And there's also the revenue leg of the federal government. It has been improving, and we're also expecting it to further improve, going forward. So, and we know, just using statistics here, I mean, it's the denominator is the economy, the nominal GDP. So if we're expecting expansion on that leg, so really a growing debt should not be, a cause for alarm, because we're also expecting expansion in growth or in GDP.
Which
so
makes the debt manageable.
Exactly. So which brings our percentage closer to the cap. So I would say that it's not really a cause for concern, but we should keep our eyes on those numbers.
What about other assets like real estate? After the rebasing of the economy, the real estate sector, I think, jumped, is it third or fourth, displacing financial services and some others. You like real estate? What's your view on returns from real estate for Nigeria?
I would say it's actually something that we should look at, and there's promising prospects in that sector. I mean, there are a lot of housing deficits and all of that. And, aside, residential, there are other ways, to invest in real estate. There's commercial real estate, for example, and there's what we call the REITs, the real estate investment, trust. So there's actually, promise in that sector, and I feel it's something that, we should, look into.
I never ever talked to you about Bitcoin or other things like that, but I'm just throwing that out there. What are that, looking at Nigeria, any other alternative assets or anything else that catch your eye that you like?
So I won't really say alternative assets.
Okay.
So I'm going to look at sector now.
Okay, sectors, yeah.
So I would say the agricultural sector is a sector that is promising.
Yeah.
And even given the new capital gains tax,
yeah.
I mean, it's also exempted. It's an particularly for companies that are starting out in that sector, I think for the first 5 years. And also, there is actually promise in that sector. I mean, who doesn't want to eat food? So yeah, so agricultural sector is something that we can look into.
Okay, so I guess overall, just as we close out the year, I know there's going to be a lot of spending and activity, and the Q4 GDP is likely to be pretty good. Well, what's your outlook as far as the economy is concerned, just generally speaking?
Yeah, economic growth, we're still expecting expansion on that leg. I mean, we've seen consistent consistent improvements in the PMI figures above 50.
Yeah. And that's for our view as the purchasing managers index.
Thank you very much.
All you analysts.
Yeah, thank you very much. So yeah, and we're expecting economic activity to increase further in the year due to the festive period and also definitely we're expecting further growth.
Okay.
Higher than Q2.
Thank you for the breakdown, Oyinkansola Aregbesola, investment research analyst with AAG Capital, for going through, of course, the NGX up 40%, fixed income, money market offers, and, of course, other assets that are available here in Nigeria. So the investment environment in Nigeria is attractive.